trying to figure out all the programming behind it. So who do we have coming into chat so far? Is my mic working currently? Trying to check the audio on that. Will help it grow with the YouTube algorithm. Music is high. Okay, I'll turn that down just a bit. This is actually the first stream I've ran the music on, just to kind of, get a little bit in the background. Let me go ahead and how is that? Is the sound any better now? How's the audio coming through now? Adjusted the mic level and the background music. Just playing around with some new things on here. Music still too high? Okay, let me drop that down. Okay, audio check. How are we sounding now? Okay, audio's good now. So yeah, there were some interesting things that came up over the weekend. I was watching, checking out Twitter, and True Demon had popped out some information. He had updated the Ortex numbers on Prague because there had been quite a few shares. I think it ended up being something like 5.6 million shares that were covered by one specific company, and it got me to thinking. We see, people always talk about manipulation. Hey, Leah, thank you for coming in. So we hear about manipulation, and they're like, a lot of what it comes down to. Some people are talking about the algorithmic trading. Well, algorithm is, a pretty technical term. Pretty much, whenever somebody goes out and says, Twitter redirected me here. Yeah. So when you're looking at prices and looking at entry points, you come up with your own formula in your head. If we have A, if B happens, proceed to X. If C happens, proceed to Y. And anytime you're building up any kind of algorithm, anytime you're building up any kind of trading plan, the more information you get, the better. So what we saw was probably, I think it was close to 30-35% of the short interest shares for Prague had been covered over the past, I think it was like week and a half. So really what that comes down to is everyone out there who's created short positions, whether it's against GME, against AMC, if they're running any kind of computer program, the more information they have, the better. Now, Ape Nation, we kind of throw them off a bit because algorithmic trading, for the most part, only works against people who have the buy-sell mentality of, if the market does this, we're going to do that. Well, against a buy and hold, it really doesn't provide much information. It really comes down to more of, they're trying to see how we react to it. So I view, some people have a bullish sentiment over Prague having, a third of the outstanding covered. Some people bearish on it, but I think in the short term, what we're going to see is that your near-term option positions, meaning options ending in the next 3 to 4 weeks, those are going to pick up. Those are going to be a little bit riskier, just because we dropped under that double-digit number of short interest of the free float being shorted, because we're up around 12%. Cost to borrow relatively the same, but a third of that short strength has gone away. Well, the good news is, if they look at that information and they plug it into, if they're running any kind of computer simulation, any kind of algorithms, they're going to plug that in and look at where the short positions are for both AMC and GME, and that might actually force them into making a decision based upon their computer models. So when I see, one group go out and for whatever reason they decide to cover their short positions, every other shorter out there is looking at that data. They're seeing, they're seeing what our reaction was to it. They're seeing what the stock market price reaction to it, and we had a pretty decent run up that week. And when they look at that, they'll, they might be able to plug it in and see to where if they took the same stance against GME or AMC, if they decided we're going to short about the same percentile of the shares that we already have outstanding, you got to look. Oh, Danelle has a question. Go ahead and get your question out in chat, and we'll go ahead and I'll answer that as best I can when it comes up. But with them looking at that, it kind of I view that we're coming up on the end of the tax season. If they are looking to cover to use this as a tax write-off, it really does come down to they're going to try to minimize their losses. But when you look at the share prices between, if you go from Prague into AMC, well, you're 10xing your money. If you go from AMC up to GME, that's, what's that, like a 5 or 6 time? So when they look at the information, they might see that there might actually be windows where they can get out of their positions, which in turn for us can really knock down, everyone wants the squeeze to happen today, or in instances, squeeze tomorrow. We're mooning tomorrow. You hear that on so many channels. Now, this doesn't necessarily, I don't give any dates, I don't give any predictions, I don't have a crystal ball, but I'm bullish in the sentiment that because they have this additional data, if they plug it in to the algorithms or whatever computer program they're using, when they analyze the data, this may be actually bringing us a little bit closer to a period where they might look at covering their positions. Because, like I said, we are coming into tax season. The year's close to wrapping up. We've got one more month. We just got the month of December, and we'll probably see lower volume during there. So we might see in that time on all three of the big ones, on Prague, AMC, and GME, we might see a little bit of a push down in preparation for covering. No crystal. Yeah, Pringleton. There's no crystal ball here. I don't have a Ouija board in front of me. I go off what the numbers are telling me. And right now, if we jump back, if you look on the chart right now, so last Wednesday I entered into some bull put positions and went back behind, and after the fact, I went through and basically did some of my homework to see what we were looking at. And of course, we've got our wedge, and we did have the breakthrough of the wedge last week, and we traded sideways for quite a bit. Unsub. Oh, please don't unsub. That's a horrible feeling in the world. But yeah, I had drawn out this line of support here, and yet again we ran down and we are testing that. We're testing a lot more solid. We didn't quite get the rundown at the end of last week. We had the half day on Friday, but we came back through, and as you can see, we are getting a lot tighter to that 35.50. Now the bull puts I have, of course, they're another half cent underneath there. I've got the 35.34s, so I've still got some risk. Still got some risk in that position, but no. Then again, when we're talking about the bull put spreads, we know where the maximum risk is on that. You look at you put up your collateral, you subtract your premium received. That's the max you're going to lose. Well, as long as we're still holding above those ranges, holding, got a nice buffer there, and we're actually going to drop down into the 1 minute chart here. As you can see, we dropped just below that 36 mark. Well, I'm running the 34.35, so I've still got another dollar buffer zone built in there. And as you can see, it ran down, tagged that solid dollar line of support and started to move back up again. And I think we're going to see this retest for most of the week. I think we're going to keep bouncing off that 36 mark. And if we break through substantially and hold, that is when I'll be reevaluating that position. Same thing if you're running options on GME. I know GME, I believe Claybro said they were green for the day. We'll go ahead and pop over onto their chart a bit. Yeah, so GME, they pushed through a little bit higher to start the day out. They had a nice run up early. Selling pressure stepped in. Ups and downs, but as you see, we are on an upward trend, and this trend might actually hold above the... I'm looking for about the 203 mark to hold. I don't really think we'll drop too much lower than that. We did have the push through, but a lot of support a lot of buying pressure has stepped in through the day here. As you see, it keeps teetering red to green, and I think that's a trend that might keep going on for GME. And I'll pop over to Prague. Prague, got pushed down and looking for sideways trading. But on Prague, I definitely would, not financial advice, but I would exercise a little bit more caution in your near-term options. Anything you have in the next 2 to 3 weeks, I'd be treating those a little bit more cautious than normal, just for the fact that with that 35% of the short position covering, and with the price action being pushed down, there's nothing to say that they won't enter into more short positions, if they've got the money and don't believe in Prague. And the thing about Prague is, yeah, you can look at the Ortex data, you can look at the short interest, the cost to borrow, but more importantly than that, when you look in the possibility of mergers with a larger pharmaceutical company, when you look at the standing patents that they have, Prague's price should be a lot higher. I believe it's being held down, and eventually the rest of the positions will cover, and Prague at that time should step up to a more realistic price target. Anywhere maybe the $8 to $10 range, that would be a reasonable position. So if you're long on Prague in the next couple of weeks, maybe it might be a bit safer to step away from options on Prague and step into the holding of shares, and maybe wait to see if there's a little bit of a run up. Of course, when you're holding the shares themselves, if you get a good run up into the $4 to $5 range and you're anticipating a bit of a pullback, that might be the time to pull weeklies on covered calls, collect a little bit of premium, and always know your stop losses. If you're running covered calls, if you're running anything that on the upside or downside has unlimited risk potential or unlimited gain potential, know where your stop losses are, but also know where your points are to take profit. Now we are going to go over some numbers here on AMC. These are for the weekly options that are coming up this Friday. Of course, the $50 options, those are still king. Everybody wants to see that 50, and we're currently looking at 8,400 roughly, which is an increase of 2,600. The 45s have picked up a bit, or they've actually dropped off a bit. They're from 5,300. They have dropped down 218 this morning when I compiled this report. And the 400 or the $40, which for the longest time the $40 were holding up pretty decently. Those are up. They're from 3,700. They're up over 750 on the day. So we're still seeing the option chain wanting to trend a bit higher, but the step down in the 45s, that kind of tells me that they're either looking for the stock price to stay kind of range bound between the 38 to 40 range, or they're looking for a good hard push up to the 48.50 range. Now we can go in and we can look at, we're going to go for this week's options. We're going to look at the verticals, which is your bull put spreads for AMC. So we're on the put side of the house. As you can see, those 34.35s that I purchased Wednesday of last week for $21 a share a contract, those are currently at 24. So with the push down we saw, these did lose a lot of value, and if you're sitting on this exact position and you were looking last Friday, we had the push down. Those actually got up to the $34, $35 range, which means they certainly were a lot more lucrative. But as you can see, they're back down to the 24 range. Theta is going to continue to kick in. These will drive down. It'll ramp up as the week goes on. But these are still a good solid contract. And at the 24 range, granted, looking at the fact, these end in 4 days, and they're only $3 more in premium. That tells you the push down we've seen and the increase in volatility, really these still are a pretty good bargain. If you were riskier, and of course, Always analyze your risk before entering any position, and this is not financial advice. But if you look, $14 a contract more, but you are just outside of the range. We're currently 77 cents above the max range on those. So those are a little bit riskier. You could maybe, if we were closer towards the end of the week, and these contracts were up to this value, you would have a lot better chance. And of course, anytime you're selling, theta is on your side, and you can definitely see it that a lot of times when I want a really, really quick strike, I will get in on contracts for Friday that are ending on Friday. I'll get into them on Thursday because I know that last 24 hours of theta is going to be, it is your best gains for your fastest turnaround. So if you're looking to swing trade contracts, that's an additional tool that you can look at. As you can see with the price action going on, did we see a dip in the price on AMC because those contracts are gaining value again? Yeah, so we have seen a bit of a push down here recently. Zoom in just a bit. A lot of a good portion of your value of options, it's not only theta, it's not only delta, but your volatility really can be a multiplier. So having increased volatility step in, you could see $1 and $2 fluctuations in your contracts, and that's where going in and waiting and checking your technical analysis, watching the charts, and seeing for those seeing when you get those crossovers, seeing when you get the RSI ramping up again. Those are good indicators. Just watch those in the future and kind of see if you can get into some kind of a pattern with it. So do we have questions? Anyone have any specific stocks they want to look at? Any positions that are in question? I know we got quite a few proggers out there. I did want to touch on prog with those short positions being covered and the implications that could have. If you are in prog contracts, I think your best bets right now for options would be the medium range, looking probably about 6 weeks out to maybe 3 months out. Those might be your best ranges right now if you can get them at a good price. And remember, if you're playing the put side of the house, if you're undercutting the market with your bull put spread, you want to be looking for your entry point, during those dips. And if you're looking for, anytime you're looking to sell, you want Simon, you got out of your prog contracts? Yeah, I still have my prog contracts. I'm debating rolling the near contracts out beyond that 6 week range if I can find a good entry point. I still plan on holding those for a possible run up, either the end of day today or a midday run up tomorrow. And the whole reason I'm holding them till tomorrow, I believe on theta, I'm only going to lose at most another $3 before tomorrow on the contracts. And right now, with the losses that have already been taken, the $3 kind of covers the buffer that I'm looking at. Once that buffer's gone, it'll definitely be time. I already stated that I do not plan on holding those beyond tomorrow, because the last couple days, when the theta really starts to come up. Expired on Friday, out of the money, lost premium because no one would buy. And yeah, Simon, that really is the danger. That is knowing when to take your profits and when to take your losses. I've gone over a few times. I do not like to hold going into Friday, unless I'm selling a position like a bull put spread or covered calls. And last week, my covered calls on AMC, I knew those were so far away from the money. I did ride those all the way through. I could have spent $2, $4 on Thursday closing those out, getting out of the position. But we really were so far away from those hitting in the money that that was where I could ride them to expiration. When you're buying and theta is working against you, I do not can you explain what a hold is? I'm a newbie to all this. A hold in Danelle, are you referring to holding your option contracts longer? When it comes to options, every contract has a theta, and that is how much value the position loses per day. So we'll go ahead and jump over, give you a look here, and we're going to go into single. This is a single position, and we're going to go on the call side of the house. Let's get back on AMC here. So Danelle, say you wanted to enter a call position, and you wanted to. We'll go further out, because let's go for the December monthlies. You wanted to buy a call position on AMC for the December monthly, and you're like, yeah, I think it'll be back over $40 by that time period. So what you do, you would come in, you would pay your premium, so you get in and you would buy these for $271 per contract. Basically, it's $2.71 per share times 100, because every call contract is worth 100 shares. So if you go over to where your theta is, this is time decay. Every day you hold this contract, it's going to lose. The first day you're going to lose $10. If you buy it at noon on Monday, by noon on Tuesday, if nothing else changes on the stock, this contract will lose $10. It'll be worth $261. Now all your other numbers will come into effect: price movement, implied the volatility of the contract. But this Vega number, or the theta number, as you get closer to expiration, this number goes up. So as you're holding, and the longer you hold, the more value this contract will lose, and it's compounding. So today you may lose $11, or may lose $10 on the contract. Tomorrow could be 11, and then 13 the day after. So as you get closer, it starts to ramp up how much value this contract loses. So if you were buying a call position, every day you hold this, the share price has to move further for you to stay at the same price you're at. And that's just by the decay of time. So on the flip side, if you are selling a covered call position, every day you hold that contract, that it's still losing value. But the way covered calls work, you collect this premium. Just every transaction has a buyer and a seller. So if somebody is buying a call position, someone is selling a covered call position. And that person, they want this number to continue to go down. As this number goes down, if they decide they want to close their position out early, well, when you sell a covered call, the way you exit your position is to buy that position back. So as that number gets less and less, that is how you close out your covered call position. So say I sold a covered call at 40 and I collected $270. Well, by Friday, if this Thursday, Friday time period, if this drops down to $30 worth of value, I can buy that contract back at $30 and protect my shares. So a lot of this channel, starting off and continuing forward, is dealing with option positions that collect premium and use theta to work for you. By collecting the premium, you're basically, I don't want to say it as exactly as a dividend, but especially for AMC, a stock that does not have a dividend. You're holding, but just holding doesn't produce any money for you. So if you find ways, especially on a covered call position, if you find ways to, collect, I usually like the 45 range. 45, 46 is usually where I'll sell my covered calls, depending upon how far I go out. Well, if I collect $170, that is my money that I get today. I can turn around and go buy shares. So by collecting premium, you stand the chance of increasing your share count. And Danelle, did that kind of answer your question as far as holding goes on on these call or on any kind of option position. And Simon is correct. Hold your position means no sell. And that's why anytime you're buying, if you're buying a position, it really does, the longer you hold, it really does increase your risk. And that's also why when you're getting into option positions, especially when you're dealing with purchasing calls, it is very important that you have a trading plan. And actually, Danelle, day trading is more when you enter into a position and close it out on the same day. Yeah, day trading is when you would say buy a call and then sell it in the same day in an attempt to make profit. Swing trading is where you buy it and you might hold it to the next day. You might hold it 2 or 3 days, but you're not looking to hold it long term. You're not looking to it's not a position that you're looking to exercise. You're looking to buy into or sell a position, wait for a drastic price change or a theta decay on weeklies, and getting out of that position as quickly as you can. And one of the perfect examples, some people who are in the chat have heard me mention this before, and you may have seen the stream. We could be, I have my covered call positions, and I'll pop in on, I'll be on Claybro stream, and I'm like, yep, just closed my position out at 70% profit. Just closed it out 75% profit. That is, depending upon the time that I have left, if in 1 or 2 days I can really get a ramp up on a position, either through, mainly through the price moving drastically, and exit that position early, it actually opens the window to enter into another position in the same week. It is possible, and if you're, depending upon your brokerage, I believe most of them, I looked it up, and it's 25,000. If your brokerage position is under 25,000, you fall under pattern day trading. Well, if you get really good at technical analysis and the stock cooperates, because a lot of it does come down to what the stock does, you can actually, on Monday, enter into position, close it on Tuesday, reopen it on Wednesday, close it on Thursday or Friday. Yeah, I am looking, the stock and crypto for dummies guide, I wouldn't really call it, I think it'd be more for newbies, because if you're already taking the step into the market, you're obviously not a dummy. There is money to be made out here, and there's just finding what positions, finding those little things that help you, little tricks. And I hope this channel it is a good place for people to come and learn some of those little tricks. To I'm not going to show you stuff that's going to make you rich overnight and give you huge instant gains, but I want to kind of show people how they can, make some consistent money. And it won't, like I said, it's not going to be huge gains. So we're going to kind of go into, and give you some of the, a little bit of psychology behind this. We're going to go into those bull put spreads. If you're on Webull, a bull put spread, that is selling puts on the vertical below the current strike price. And as you can see, it has it lined up, 34.35, 33.34s. So what this is doing, you are selling the higher strike price. You are collecting the premium of that higher strike price, and you are turning around and buying a position at the lower strike price. So anytime you enter into these, you have to put up collateral. Anytime you are selling an options position, you have to put up collateral. If you're if you're selling a covered call position, you're putting up the collateral in your 100 shares. If you're doing a cash secured put, you're putting up the collateral in the shape or in the form of the amount of money required to buy 100 shares at the strike price you pick. And if you're selling any kind of a spread, you are putting up the collateral in the form of the the difference in the two strike prices, or the maximum difference in strike prices between either side of the trade. So this being 34 33s, the difference is $1. Multiply that by 100 shares, you put up $100 collateral. Now in this position, when you either close this out or it expires, if you close it out, you collect your collateral back right away. If you ride this contract to expiration, you'll receive your collateral the next market day after the week is closed. So if it expires on Friday, your options are done on Friday, your $100 per contract is released back to you Monday morning. So looking at these are next Friday's bull puts. So say you were sitting on, and everyone who's been here before knows I like $1,000 blocks. If you were sitting on $1,000, and keep in mind that this is a stock that does not have a dividend to it, so you're not at risk of early assignment or anything like that, unless there's like a huge run and you decide to close this out. The risk of being exercised and having these brought against you, it's minimal. There still is a risk, but it is a minimal risk. So say you had $1,000 and you're looking and you think by next Friday there's no way we're going to get below $35, but you want to build in a buffer. So you don't think we're going to get below $35, so you look at these 33 34s and you decide, yeah, I'm going to go ahead and enter into 10 contracts. $1,000 will be put up as collateral, and you will collect 30 cents per share per contract. Essentially, you'd be getting $34 per contract, 10 contracts, $340. That is your money today, and you could take that, if you so choose, you could take that turnaround and reinvest it in shares. Now, an important thing, I talk about stop losses, and stop losses if the position goes south on you. If you are looking to turn a loss and the pressure gets too much, you always want to keep capital on standby to exit those positions. That's the whole talking about holding positions too long. Well, sometimes if you get it to where your buying power, where your spending power, if you keep that close to zero, if you're the type where you get enough to buy a share, okay, you're going to buy a share, that could force you to be locked into a position that you may want to get out of. So on positions like this, if you're going to enter in, know if you want to have a stop loss in place, and also know based on your stop loss how much capital you have to have on standby. So you could theoretically take the $36 per contract, 10 contracts, $360, and immediately turn around. What, no eggplant wrestler? A cucumber, no eggplant? So you could take that $36 per contract and reinvest it right away, but then you're exposing yourself to the possibility of having to close out positions that... Oh, it was Simon who put the cucumber out there. You could find yourself in a position where you have to close out other positions that you don't want to in order to get out of a position that's going bad on you. So part of your risk management is definitely look towards making sure you've got the capital standing by to have an out. Always leave yourself an out. Do not, as much as you want to see it run and you think it'll turn around, there's a chance it's going to turn around. Don't get stuck in a corner. That is, you can get stuck in a position where you're holding and you watch it continue to lose value and lose value and lose value, and eventually you're standing at a big goose egg on the screen. The value will drop down to zero, drop down to $1 per contract, and at that you will not be able to find a way to fill it. That also goes into the more time you give yourself before expiration, it does give you more time to try and get out of a bad position. So let's see. J wrestler got eggplants, got fist bumps. And of course, if we have any new viewers in here, I try to do at least one of these a day. The middays have been less than an hour because I'm usually doing those when I'm on lunch. I'm currently on vacation from my regular 8 to 5 job, so I'm tentatively looking to run up until the Claybro stream kicks back off at 2 o'clock, and kind of looking to do like a hot handoff to where Clay's stream ends, mine starts up, and then when we're fixing to go into Clay's stream, that's when we'll wrap up here because I like being on Claybro stream. It's fun over there. It's fun over there, entertaining, get to hang out with everyone. So does anyone have any specific positions they want to look at? I kind of want to jump over and have a look at Sheeb real quick. Oh, that was a decent run-up. For those of you who have not been in here before, I actually took everything I had off of Webull except for Sheeb. I used to use this for a lot of trading, but in preparation for this stream, I moved everything away except for Sheeb because of everything else I have, I cannot get Sheeb on there. So pretty much that's all I run on here. That's a nice little bounce up. Wow. Look at those 4 glorious tests right there. Simon, only holding AMC in Prague. Once AMC squeezes, I'll have money for other plays. My 8 to 5 job, I am actually a system technician for a cable internet provider. I do the mainline, the coaxial cable, and a little bit of dealing with the fiber optic cables. So I'm usually out in the field during Claybro streams. I keep a Bluetooth speaker in my pocket. We'll come up with a bunch of questions for the next stream. Yeah, I have no problem. I have no problem with answering questions. If you want to take notes and ask questions later, I have no problem going over the same material, even because some people have heard this quite a few times already. Because we get new people in the chat and they haven't heard some of this before, and it certainly works towards getting those creative thoughts going. So as you can see here, this is we got the nice little pennant going on. And this support line was actually one that I put up last Wednesday when I entered in my bull put spreads. AMC Prague, Sheeb as well. So we're going to go in to try to get in that 5 minute here. So where exactly was that? I'm trying to see here. Okay, so here it is. So for those who weren't here, who haven't been on the stream or didn't get to see any of this before, this is actually the Wednesday morning fall off we had. So we started the day, had that huge push down, bounced, came up, bounced further down. We did have a lower low, but on the recurring we saw a higher high. Now, seeing these long, especially that beautiful candle over one, that beautiful candle right there, we always like to see those big candles, but we ran up, had a higher high, ran down, had a higher low, and it was actually this candle right here, and this is on the 1 minute chart. This is actually where I entered into the bull put spreads that I'm currently tracking right now. Those are the $21 bull puts that I'm hoping to ride to expiration. But who was that was asking about day trading? about day trading options. I'm looking at the chat here real quick. I think it was Danelle that was asking. Yeah, Danelle was asking about day trading on this. So a good example of day trading options, and if you decide you are going to be day trading options, day trading means specifically that you have to ensure, you have to, have it planned out, have your profit, where do you want to take profits and where your stop loss is, and you do not hold for any reason, do not hold beyond that day if that is your trading plan. And I actually use this as a perfect example of good entry points for day trading. So on this run right here on Wednesday, ran down, bounced off support, got pushed back down, had the lower low and the run up to higher high. When you see it push down again, this is it's not that good of an example, but you got your cup and your handle. You're getting higher lows. So timing out on this tick right here, if you bought your okay, that's Simon talking to Leah. So if I had the capital, and technically I did have the capital, but it was tied up in preventing having stop losses in place. I had the capital standby, but I wasn't going to risk other positions to enter into a day trade. But if you decided to get in, and this was my entry point on my bull puts, had I had the money to enter into a day trade call position and bought there, we did have the run up. It pulled back a little bit, but then again, we still here had the higher low and the push up. And we looked at when we had this run of 5 candles, this would have actually been a decent exit point on a day trade. If we look at the times on these, that was at 10:03 a.m. Here we are at 10:47. So 44 minutes later, even at the very worst of a tick, what are we at right there? Right about 38.90. So from 38.90, and we'll even go, so I believe I was 38.04, 38.05 was when I got into this position. You would still be looking, even worst case scenario, probably, I think it was 35 cents per contract. You'd still be looking at, per contract, maybe a 30-40 cent gain, depending upon what the volatility was doing at that point. But that would be a good setup there to get out on a day trade. You see your test, you see it dip down, you come up, you catch your higher lows, find your entry point, second higher low, confirms, and then you start to see a run of red candles. That, for me personally, that'd be a good point to get out of it. And that would be a good example of a day trade. And of course, we had that wedge breakthrough. The wedge breakthrough, saw that coming. I was looking for a bounce. I still am looking for the bounce. In a perfect mathematical world, that intersection point right there, I did talk before that you can manipulate your own data to fool yourself into seeing what you want to see. And we've been wedge bound for so long, but you can always move the lines around, change what's out there, but you're going to change your perception of what you're seeing. So I'm actually going, until we get past this intersection point at 1 o'clock on the 2nd, which I think is Wednesday, I'm actually not going to touch any of these lines until we get past that intersection point. Just because I don't want to, if I'm looking at this and I'm making my decisions based on it, I do not want to change anything out there to kind of suit the narrative that I'm looking for. If that makes sense to anyone. I don't want to change how I perceived it before with new data now. I might add more lines onto it and get one of those cool little technical analysis channel things where they've got like 1,000 different lines out there. But I think right there, between that wedge and that lower support level, I think that's pretty much all I need to see on there. So again, do we have any questions in chat? And of course, if you want to like, subscribe, turn on notifications, if you want to, share this channel out on social media, whether, Facebook, Twitter, whatnot, help get the word out on it. I certainly would like to grow this channel and, start getting more people in here, just, because, having questions asked during the stream, I think it would actually make for a better... How's your... Day's going pretty good, Wrestler. Enjoying my vacation. Not having to... I forgot to turn my alarm off this morning, so I got woken up at 6:30 in the morning with it going off. I'm like, oh, no, okay, I can go back to bed now. Now, okay, I don't know if you were in here earlier. In the short term, Danelle, I am immensely cautious. I'm really cautious on Prague for maybe the next 3 to 6 weeks. I would exercise a little bit more caution than normal, just because having 33-35% of the short interest covered in the recent time period, and the push down we're seeing, because we did have that huge run up. Okay, I see Toad's asking some questions. Long term, I think this is an excellent dip buy for Prague, and when I find exits for my Prague option positions, which the one position I will not hold beyond tomorrow, I may look to buying shares instead of options contracts, just because this could be a little bit longer of play, and to play that far out with options, that I will be dealing more with the theta won't be that good, or won't be that bad in the short term, but I think this has turned into a medium to long range play. So I think a safer zone is outside of 6 weeks. Now, it's not to say other companies might decide to cover their positions and we could see another huge run up. That is always a possibility. That is why I'll be keeping the rest of my Prague call positions, which don't end this Friday but 2 weeks later. So I'm going to be holding on to those for maybe about another week, just to see if we do get that run up. But the ones ending this week, I do not want to hold beyond tomorrow. All right, Toad, when looking at a particular graph, best to look at 1 day, 1 week, or 1 month timeline to help interpret highs and lows. A lot of that does come down to what you're looking to do with them, Toad. If you're looking to do day trading or swing trading, you're going to want a shorter time period. For most everything, I kind of like to just look at the 1 minute, because... Oh, sorry. Excuse me. The 1 minute and the 30 minute, if you notice on AMC, I was bouncing back and forth between those. The 30 minute is a good one. The 4 hour gives you more of a long-term look. And certainly the further out you go, the more definition you can see in the patterns, because you could almost extend this line out all the way back to here and extend it out. So the further out you go, you can see more definition. You can see the broader patterns, and they will start to line up better. But it all depends what type of trading you're looking to do. And me being the type who is looking to just do, especially on AMC, just do weeklies as far as doing covered calls and bull put spreads. I find that the 30-minute is really good. Is really good for my purposes, because I'm not too concerned with what happened a couple weeks ago, but the trends within the past week or two, those have more meaning to how I trade. But certainly, the further out you go, if you get onto the 30-minute, the 4-hour, the 1 day, you can see those long-term patterns start to fill out better. But as you can see on these, even if you took this and expanded it out on the 4-hour, these lines are still almost going to line up. So all it is, especially with how nice of a pennant we have here. But if you took, oh, no problem, Toad. If you took from here, and we'll actually draw a fresh line on here just to compare the two bottom ends of the wedge. So if you decided to go from the bottom of here and go on, you notice it flattens your wedge and will actually extend the wedge out further. So if you go further back on your wedge, you can see we're just below the new flattened lower wedge, and we're still range bound by this by the horizontal level of support here. So that was what I was going back to earlier when I was saying that you can in a way manipulate the data to show you what you want to see. Now, you always hear when in doubt, zoom out. And of course that's good for seeing the run up, but you might be actually giving yourself too much data at that point. Mr. Simon explains why I couldn't find, oh, for checking out by Prague? Yeah. So one that we touched on Friday that I wanted to have a look at here, we were looking at Peloton. Now, this is not an endorsement of the stock. I certainly want to make that absolutely clear. I do not endorse any stock specifically. But if we look, we had it not precisely, but just before Thanksgiving, we did have a gap down. And going into the Christmas buying season, we did see a lot of buying pressure step in. If we look on the daily, 1, 2, 3, 4, 5, 6 red candles only all the way through that entire run. And then we come here. Again, we got another huge gap down. And we're talking a gap down from, the $80, $90 range down into the 40s. Yeah, we got a low of 41.13. So, not financial advice and not an endorsement of any stock, but I think it was a Trapper who asked me about, when I was looking at this, asked about the gap up. And going into Christmas season, I haven't been able to find any information on why it gapped down so hard, because in addition to looking at candle charts, running your technical analysis, there could be a fundamental change in the company. Did a new CEO step in? Did anything in the management change? Was there a recall on any of their products? Did a competitor launch a new product? I haven't been able to really research and find anything. Or even, earnings wasn't that long ago. Did they really have a bad earnings report? But yeah, this is what I'm actually looking, and if we zoom in, so we're in huge oversold territory. We've been oversold, since the fall off. They've been oversold, barely jumping above, what we got, not even above 40 on this whole run. Only 1% of what Wrestler says. So I'm actually looking for a reversion play. I'm looking for this to start another run back up. And I was looking in single calls, and where are my notes at? I know I had some notes written down. Simon, you hurt wrestlers' feelings. How could you do that to him? Everybody hurts. Yeah, I think it was the. I just kind of wanted to have a change, or have a look at the change, because it was a January monthlies that I was looking at, $80 strike price at 42. Yeah, see those ones. Makes you feel better about Fun Catastrophe. Yeah. Yeah, I did get in on Fun. I got in a super small position. I knew that there was a whole ton of risk there, and it was a lottery ticket play, but it was so small. I think two contracts of my bull put spread made up the difference of what I lost on Fun. Like I said, it was a lotto ticket. Could have cashed out really good, but didn't, so I wasn't too worried. So yeah, these 80s that I was looking at last week, we were looking at these Friday, and these were at $42 a contract. Oh, thanks, Danelle. Yeah, I was trying to think of something just to fill the silence, set a vibe and everything, and I figure since I had, I still had 95% CPU power, I'm like, I can put music on and not even worry about it. But these were $42 last Friday, and now they're down to $22. So yeah, if these go much more into the bargain basement, I might be looking to see if these dip down this week into the $15, $16 contract range. I might jump on some of these right here and look to swing these out and maybe get out of them right around Christmas time. Maybe hold these for 3 weeks or so, maybe a month. Okay. So, anyone have any other positions we might want to look at? I'm not a fan of buy the rumor, sell the news, but certainly if we can do some analysis and check the chains out. Toad asked, do you take music requests and play us a song? Well, I gotta be careful about not getting any copyright strikes against me. That's why I actually went on, and this is the background music is specifically non-copyrighted music, and it's made intentionally for background music. You gotta binge watch Jeremy Twin on YouTube, right in your hometown. Is that a friend of yours who has a channel that he's looking for? Is that a friend of yours in the hometown, or Jeremy DeWitt? Oh no, I do not sing. I can't carry a tune in a bucket when it comes to singing. I have one of the worst singing voices in the world. And maybe at some point I might play some of my own melodies some alterations to other songs, but especially being a new channel, I do not want to get hit with any copyright strikes. Well, I tell you what, Wrestler, I'm going to go ahead and take a picture of the screen here. I'll look that YouTube channel up. I'll give it a look, and who knows, because you know, just like some other YouTubers, I've got a buddy of mine. I'll have to get it out on Twitter. A buddy of mine over in England. He does Dungeons and Dragons, fantasy gaming type live streams, and he and I are actually trading subscribers right now. So if I can find another YouTuber out there. I can play guitar while Clayro sings. Yeah, that would be funny. Well, what we could do is I can try to find the music for Makukuracha, and that way when he does the LPDP, I can sit there and play the guitar, and he can sing the LPDP. We can be like a mariachi band. So we're still looking at AMC. We're on the singles. So currently, because of the market being, and this is part of your analysis that you can do when you're looking to enter. Any advice on where to learn the basics on stocks and cryptos? Oh, okay. Advice on learning the basics of stocks. There are some really good programs. Fidelity actually has Fidelity Classroom type stuff. A big series on just understanding stocks, understanding not only stocks, but they have some specials on some videos on doing ETFs, which ETFs are basically like a basket of stocks. Yeah, I would look towards some of the Fidelity Classroom type stuff. That'd be a good place to start. Cryptos, exactly, Toad. Janelle, just watch the channel here. That's I certainly if you have individual specific questions as far as like an actual starter tutorial. I don't at this time have any plans for individual stock videos. I may end up doing some videos on options trading, understanding the Greeks, understanding what all the numbers mean for individual positions, also going into going in your different spreads, like, because the bull put spread's fairly easy to understand. When you start getting it, there are other ones, four-leg contracts like the butterfly, the condor, the iron butterfly, the iron condor. When you start getting into more complex strategies, then it really starts to tie in a lot of your long-term technical analysis, because when you're dealing with any of your butterfly or condors, you're dealing with range-bound stocks that you want to be fairly stable, and you want to be able to bracket your share price, meaning you have a set of options above and a set of options below, and you want your share price to remain in the middle of those two sets of positions and kind of bracket them in. Those are advanced options, and I've played some of those before. AT&T used to be a gold mine for me, and ever since they had the run down from 28.75 down in the 25 range, I've avoided AT&T options just because they're not as stable, and I want to give them time to figure out where they want to be, where they want their share prices to remain. And yeah, and that is a very good point, Simon. If you're new to the market, buying individual positions, learning how to read the chart, how to average in, learning your buy sell points. Those are the basics that will set you up Yeah, everyone wants to get rich, Danelle. But like I stated earlier, the purpose of this channel, when the MOAS happens, the shares that you have are what are going to get you rich. But for people who have a set income, you work your 8 to 5, you have your regular bills. There's only so much money you have to invest. I wanted to get some strategies out there to where people can generate more revenue for their portfolio and have it to where their portfolio can support itself, to where you're not having to, every 2 weeks or every month throw more money into the brokerage, where the brokerage can start to generate its own money. Can you please look at the crypto coin radical? Okay, is that available here? Let me see if So what are we looking at here, Toad? I'm assuming this is the correct one. Let's go. Metallica 1. Yeah, Metallica 1 would definitely get me hit with a copyright strike. So looking at it, so it looked like, let's drop a vertical here. And it's pretty easy to see. This is going to be a one-liner right here. So if you look, going all the way back to October 29th, this is holding up pretty decently as a level of resistance. Thanks, Mr. Simon. That's what I was doing so far. Just got started in May. That's it. Can you compare weekly timeline to monthly timeline? Well, it's looking at, is this a fairly new crypto? Past what, 2 years, 1 year, 2 years? Oh no, we got 1918. Okay, so I mean, Toad, I certainly, I can't do financial advice, but so it looked like it had a fairly high start. Well, it shot up, pushed down, huge long run. I mean, if you look at the channel, so of course, not being financial advice, that is a pretty solid channel. And it looks like, based on that channel, there has been a breakthrough on it. Now, the only question is, because as we saw before, the weekly timeline is in a trough. Monthly time on it increases. So looking at it here on the weekly, if we zoom out, you see it's fairly well channel bound. So it broke above, huge run where all this time it was stuck in this channel. Yes, Danelle, like I feel like I started 2 years ago, I was confused about options. So yeah, it had a pretty good break above, got driven back down. It went back to being range bound all through here. We have had another break above. So looking at, trying to discern a trend off of here, it looks like you might have a little while where it's playing above, but pull the daily here and kind of have a look at it on there. Yeah, I see what you were looking at, Toad, on this. And it certainly looks like you've entered this high position, a repeat of this high position, matching a run up and a pullback, run up and a pullback. So you might see it bounce back up a little bit and have a repeat of this push, but I would still be trying to keep an eye to see if it gets pushed back into this channel. If you do get pushed back in and you get back around this, we'll call it, if it goes under 1875, if I was looking to play this crypto myself, I'd maybe buy a bit in at 1875, anywhere in this range right here, because it looks like it does spend, especially recently, spend quite a bit of time above that. You had this nice run, you had a boomer, channel bound, and then it boomed up twice. So yeah, if you dip back down into the lower end of this channel, I'd maybe look for an entry around there. And it all depends. Are you looking to hold this long term? Or are you looking for short term gains? Yeah, split the channel into thirds. If you touch that bottom third of the channel, look for an exit on the upper 2/3. Yeah, like certainly if you can watch it on Coinbase, even I keep notebooks. And if there's a play that I'm looking at, if I see something interesting, I'll jot it down and just kind of like, okay, watch for this to drop down to that range, and basically give myself little notes. And if I've got the marks up on the screen, if I open it back up and see, oh, I was looking at this channel before, and if I see, it drops back into that lower range, and I look at my notes, and my notes tell me I was looking for that range, well, that looks to be my point where I'd want to get back into it. So yeah, having caution on this, definitely, it's definitely warranted. It broke through the channel. It's been above it for a couple days now. Oh, it's just, yeah, because we're on the daily. So it's been above there a little bit over a week. Look for it to break back down, get in that lower end. Now let me go through the comments here. Thanks for assignment. What I'm doing so far started in May. That's all. Can you compare? Okay, got that one. Janelle, tell you what. Janelle, what to tell you, but I myself started stock trading in February with AMC. Simply buy the rips and sell the dips. Yep. And Wrestler, looking at, buy the dips and sell the rips. Well, I think you got that backwards there, Wrestler. You should be buying the dips and selling the rips. She must be rolling down some old interstate wide open. Yeah, so I've given this not as financial advice, but as kind of real world application. If you go out and find yourself some decent stocks, some stable stocks that are under the $5 a share range. If you have the money to enter into some of those, and if you can find some good stable stocks to enter into that are under the $5 a share range, and you have the money to pick up, if you're looking to play with covered calls, well, look for something at the higher end of that, between the $4 to $5 range. Pick yourself up 100 shares and start learning a strategy called the wheel route. So say you have a stock that you buy in at $4.75 and you buy 100 shares. and you start selling covered calls against it at the $5 range. Well, you keep playing those to learn how they work, and if it's a fairly range-bound stock, well, it might run up, tag that 5 at the end of the week, and your calls get sold. And then what you would do is, because you collected a premium, and you keep collecting the premium every week or every month until you get exercised on. Well, if you get exercised on, then you also have the $5 per share, the $500 that you spent, or that you got from your position being exercised. Then you can start looking at the low end, and you can start selling cash secured puts at the $4.50 if they're available, and you'll start collecting premium on those as well. So it works really well on stocks that, if you can find a good stock, between that $4 to $5 a share price, and it stays right in the center, well, if the option chains are set up for weeklies and you don't have to worry about getting exercised due to dividends, you keep doing covered calls until you get exercised. And then you turn around and you keep doing cash secured puts, selling cash puts where you put up, you'd be putting up $450 that would be locked away, and you keep collecting premium like that until you get exercised on that end, and you're forced to buy the 100 shares back. And you keep doing that, and that's actually called the wheel. And there are several videos on it. You can jump on and look, and just options wheel trading, and it'll basically give you a run through on how you can use a stock to keep generating its own revenue. And it works really well for stocks that don't have a dividend, because dividends. Roughly how many different shares is good portfolio? Yes, you can over diversify. Toad, one of the videos I'm looking to do, I don't know when it would actually be out. I gotta go through, figure out how I want to structure it. But if you look at the spiders, the stock market's broken down into 11 different sectors. Now, if you decide to diversify into every sector, that can really water down your portfolio. You're diversified, but diversified to the point where it's harder to invest sizably in any one position. So for my personal portfolio, what I've done is I've actually gone and broken it down into 4 or 5 different sectors. So it's a lot easier to fill out. And that just means some of the sectors you run into are materials, manufacturing, water, energy. Well, you can take all those and put them into one individual rather than having to spread out into the 2 or 3 different sectors that they represent. Just combine them into one. Oh. Yeah, thank you for stopping by, Danelle. I hope you have a good afternoon. And of course, I'll be back on Claybro stream. If you see me, if you pop in on that stream, see me on there and have any follow-up questions, or when we get more videos going, next time we have a live stream, and if you have questions asked there, jot them down. I have no problem answering them. But hope you have a good day. Now, Toad, when you're looking to build a portfolio and dealing with making sure you got proper diversity, and this is one thing I'll be touching on in when I get the videos up and running. A majority of your positions, when you start looking at a long-term investment, you probably would want probably be looking to get into like 3 or 4 exchange-traded funds, ETFs. And those really should make up the bulk of your investment. A fairly well-balanced one, 3 to 4 ETFs and maybe 20 to 30 individual stocks. You can get a pretty good spread, especially with the stocks if you have specific companies that you want to invest in. Try to cover all your different sectors, because that way, if one part of the stock market gets hit, of course, by diversifying, you're protecting yourself. Say the tech sector takes a huge hit. Well, if you're also invested in energy, like electric companies, electric transfer companies, if you're invested in water, different, I don't want to say commodities, but like if you have some in consumer goods, if you're partway into real estate, if you've got some positions in finance, real estate and finance actually are some of your better companies for monthly dividends. And that's one thing you got to look at is when you're building your investment portfolio, are you building it for long-term growth and willing to sacrifice dividends, or are you looking for a way to get a compounding interest where most of your positions are generating a higher dividend? You have to analyze what type of portfolio you're looking for. And part of what I do with the structure that I use is I break it down to the top of my portfolio deals with my ETFs and with AMC, because I do hold AMC as a long-term position in the thesis of the MOAS, so it fits into the higher end positions. But then all the rest of my stock positions are broken down by, do they provide a monthly dividend, a quarterly dividend, or no dividend at all? And that's some of the positions, I sacrifice dividends to get into specific sectors that I want, such as Tilray for cannabis, SLI and LAC for lithium, URG and UROY for uranium, in the material sector. So by having those material positions, those are all between uranium and lithium. Those are looking to be high growth, not only in the EV sector, but also in the energy sector, as more places are looking to maybe move towards nuclear power. But then again, some of the you got to look at nuclear medicine as far as do they use is uranium used in any medical applications? So you have to analyze the different sectors and see the usage behind them. And everyone right now is going crazy for EV stocks. Well, don't just look at EV stocks. Look at the companies that are going to support the infrastructure of electric vehicles. Look at companies like ChargePoint. Well, Toad, thanks. About half my portfolio is fully managed cash and shares, 10%. Annual yield 1%. Okay, so do you have a management company that handles your portfolio for you? Half my portfolio is in a fully managed cash and shares. Yeah, 10% annual yield, that's ISA is mainly ETFs. Okay, yeah. Yeah, and a lot of investment companies will look towards ETFs. They'll look towards ETFs because ETFs they're already built to purpose. Are you looking for, of course, the SPY? That's the S&P 500. Are you looking more towards the tech sector? That would be your Qs. Are you looking? Well, I mentioned Tilray earlier. Okay, are you looking to get into the marinara industry? Well, there's an ETF. You go to MJ. MJ is the ETF that handles the marinara. You can look at. Like I hold two positions for uranium. Well, I believe it's the 4 U's, UUUU. I believe that one is actually an ETF towards uranium. Don't quote me on that, but I think I think there's a uranium ETF, and every sector out there already has ETFs built towards it. So you could build your portfolio 100% just off of ETFs. A new company that will bloom in the EV charging sector is a startup based in Frisco called Volta. Yeah, if they're a new startup company, right now, I would certainly, if you're looking at charging companies, because I believe right now ChargePoint is the largest of all of them out there. So if you're looking at a new company that's entering the market, it's available UK. You can invest $20,000 per year, no taxes paid on your gains. Okay, well, that's some good information there, Toad. I take it you pay tax on your gains when you take out. Is that kind of set up like a 401k, or I don't have much experience, but I hear people talk about the Roth IRAs all the time. But is that set up like a 401k where you pay the tax when you make your withdrawals at the end? Simon, you were talking about the new company there in Frisco. If you're looking to get into a company like that, especially in a blooming sector, I would look at not only at ChargePoint, but all the other look at all the other EV charging companies right now, and see how they stack up against. See who the largest ones in the market are, and compare the percentage of the market. Percentage of the market that each one of them hold within the sector, and also look at their profit to earnings, because that could potentially be a gold mine right there if you do your homework on it and see that you might be able to see compared to the market and compared to their share price. Look at you should be able to go in and find their credit to debt ratio. Taxes paid on all your profits. Okay, yeah. Yeah, see, Toad, I'm not too up to date. I know how a lot of this stuff works here in the States, so it's nice to hear how things are run in other countries as far as finance goes. But yeah, Simon, do your research on the company and really see how it stacks up against the rest of the sector, because you can compare. A lot of people look to compare stocks that are in different sectors. So, I'm in Apple, and I'm going to compare Apple to Global Water Resources. Well, they're totally different companies and totally different sectors. Some people think just because you see the same price movement in a stock, you can compare the two together, but you really have to look at not only what sector are they in, but what their position within their sector is. So yeah, a charging company for EVs, see how they stack up to the rest of the sector. And that may be, if their stock price is low and you look at it and see that they're severely undervalued right now and you think the price is going to shoot up, yeah, that could be a nice low-level entry, and just wait for the prices to start ripping. Of course, not financial advice, but not only doing technical analysis, but fundamentally check the company out, and all their finances should be a matter of public record. Are they a company that's in debt? How are their prices compared to how much free cash the company? If the company's operating in a deficit, well, do they maintain free cash in case a new product comes up? And that goes, your technical analysis is good and everything, but is it a fundamentally sound company? If you can answer yes to good technicals and yes to good fundamentals, then that's something that I would look to buy. Just got to do your homework. So who all do we still have in chat? Kind of scrolling through here. Because we had Simon, Wrestler, Toad, Danelle left. I know I saw DD214. Is you still hanging out? Leah was in here. Oh. Oh, okay, 214's back. After MOAS, I'm parking some of my money in Ricey, IDEX, Sauce. Oh, Rolls-Royce. Rolls-Royce can make electric airplanes. Okay. IDEX finances electrical vehicles, middleman. Okay, so they're a finance company. Yeah, that's if they're a company that handles specifically the financing in the EV sector. A lot of finance companies, they do. I think I mentioned earlier that they do provide good dividends. If they specifically do EV financing, then they would be secondary directly affected to how the EV sector does. SOS is crypto mining. Are they the actual miners, or are they blockchainers, or EVGR? Yeah, that's a fairly good list you got right there. I actually was looking at Rolls-Royce back in the day. Their share price was absolutely atrocious, though. I haven't looked at them since, but when I looked at them, they were super, super, super low priced. I debated getting in on them. And, well, let's... Electric tractors for farming. Yeah, it's... So much of the world is looking to go towards electric vehicles of every type. So we're on the daily chart for Rolls-Royce. Yeah, it looks like they came up a bit, but they're on another downward trend right now. Had a run up on earnings back in between March and April. Looks like they did good on their earnings back in August. Yeah, if Rolls-Royce returns back into the $4 range, any increases to positions you can make in these days, God, big little dip right there. Yeah, see, and when you're looking at stocks for a long-term portfolio, something you're looking to hold, next 5-10 years, or even towards retirement. Oh. Well, that's pretty good gain right there, Simon. That's the whole point behind it. Buy when it's low and then sell when it runs up. In the $1.90 range, though, looking good up here. So looks like it's pulling back a bit. There might be a position for a place to get re-entry. This tiny guy right in there, and then a big boomer after it. Haha, my glorious Ford. This was actually, of course, this is not an endorsement of any stock, but Ford was actually the first stock I ever bought. So this is the stock that started it all. Go back on that 30-minute. Oh, what a glorious gap up there. What was that? That was 28th of October. Gapped up, huge run, channel bound. Still channel bound right now, but just looking phenomenal. I love my Ford. All right, checking the time here. Been watching these. They're not very volatile. I think they're good long-term plays. Yeah, yeah, so when you're looking at these long-term plays, definitely, of course, you want to see a little bit of growth in the stock. So certainly make sure that even if they're long-term positions, just if they're holding their own, it's possible that as long as you're not. I'm trying to avoid financial advice here. You always have to measure growth versus wanting to hold, especially now if the stock is offering a dividend and they're holding their share price, then you're going to be getting, it's going to compound. The more shares you have, you collect your dividend, especially if you're using a DRIP, dividend reinvestment program, to where you collect your dividend, it goes right back into the stock. As long as your share price is holding and you're not losing ground, then you're not really getting hurt. But you have to evaluate the stock to see if the dividend that they pay out is actually sustainable. Because last week I actually exited. I had some of the Credit Suisse ETNs, and they paid out spectacular dividends. But I was looking at them, and they could not maintain their share price. So what's the point of collecting a 14-cent a month dividend if your share price is falling 16 to 20 cents a month? And we're just looking at it, and there's no way they were able to maintain their dividend. So I actually got out of those positions because they just weren't financially sound. They couldn't maintain. So I was getting dividend, getting more shares, but in the long term I was losing out on position. So yeah, I dumped those because after analysis on them, it looked good on paper, it looked good seeing the dividends roll in, but you're losing money. So what good are dividends if you're losing money on your position? So we got about 5 minutes left in the live stream. Gonna be getting off here at 2 Central and getting ready for Claybro to go live again. Did anyone have any questions they wanted to get out in the chat before we wrap this up? Any specific ideas or any concerns you had with any positions? Of course, just friends chatting here, no financial advice. And of course, if you enjoyed the content today, like, subscribe, turn on notifications. If you can share on social media, if you know people who are on the fence about options trading or on the fence about the market in general, and they're just looking to get information, certainly invite people to the channel. It's I certainly want to grow it, and the more people that are reached by this, the more we can prevent people from losing money. Who's Clay? Yeah, Prague's still continuing to fall. It's yeah. Once once we wrap up here, I'm gonna do evaluations on Prague just to see. We're coming up on that $3 mark, and not financial advice, but like I was saying earlier, if you are in a prog position in the short term, definitely go through, reevaluate your position, because we are getting into some dangerous territory with those short positions being covered as they were. If support doesn't step in soon, this could continue to drop, and that of course means it's a fabulous place to jump in and to buy shares and give yourself a lot longer of a position. But for options, the risk has certainly gone up on prog, and if you have some positions that are ending in the next few weeks, definitely proceed cautiously on those. So Clay is this guy from Iowa or Idaho or India, one of those places that starts with a vowel, maybe Alaska. I think he runs a channel about crypto. He's got a SHIB channel out there. Y'all know I'm just picking. Clay's my boy, and I love being on the channel. Love hanging out there. Love talking with everybody on. So we're going to jump in real fast in the last a little bit here. We're going to look at AMC, the Chipmunk Whisperer. Clay's from Zimbabwe. Hey. So yeah, AMC is still holding to the support from earlier. See, these are the cautious points, because if I was looking to get in on covered calls for AMC for this Friday, we're not even, I don't like being below 45, and only being at $18. I would have to see a little bit of a run up before I think about getting in covered calls, because I do like the 45 or 46s for those. Jump and look at the vertical real quick on the low end. So what you can do is you can look at the open interest. The open interest actually tells you how many contracts are open at each of the strike prices. So this is for this Friday, and you look. So at the $40 mark, we got 51.93. We got 72.63 at the 45, and at the 50, we've got 87.76. Now, open interest, these are basically your call contracts. And I actually use Market Beat. Market Beat is where I go to see the change. Such as, so at the time I was putting this together, the $50 strike price was at approximately 8,400 contracts that were open, and that was an increase of 2,600 in the day. So on Market Beat, you can look and see the change in the option chain, but you can go in and just kind of see actively what you have for open interest. Yeah, I think in order to see that on Webull assignment, you would have to have the level 2 to see the changes, rather than just the actual open interest here. So we go back to the chart, and as you can see, aside from that touch we had where we just dipped below 36, it looks like we're holding an upper channel here. Where is this going to put us? In the 36.30 range. So yeah, it looks like the rest of the day we might be on a little bit of an upward trend, but I don't see us getting back down to that 36 range. Now keep in mind, here on Webull, if you're looking towards the verticals, you're going to see a lot less contracts. Those are on the call side of the house. Going to the put side. Yeah, you actually, to get your level 2 on Weeble, you actually have to go in, subscribe, and I use the free trial of level 2, but when I was looking at the level 2, I really wasn't too interested in seeing what was coming in actively as much as I was just for just for the charting of it. That's mainly what I use Weeble for now that I've moved all my other positions off of Weeble except for Shib. I just use it for the charting because from what I've seen on other brokerages, this is the best charting for doing technical analysis. But yeah, you just have to go in and subscribe to activate the level 2, and that should be anytime you're in looking at individual stock. If you scroll down to the bottom, I believe that's where it has level 2 not available. Please subscribe to activate. Yeah, that's where you would find that. Let me check on the phone app here just to confirm. Got new IPOs coming out. I also tend to avoid IPOs. Not financial advice. Do what you would like. Yeah, so if you're in the telephone, if you're on Weeble on the phone app, as you're scrolling down, you have your charting, and then it's orders level 2. That just tells you the orders as they're coming in, and I believe that would also show you the changes in the option chain. I've never actually looked at it on there, and below that you would have your time and sales. Okay, I'm looking at market beats, so the open interest column will tell me the amount of time. That'll tell you, it doesn't tell you in the money, but all you got to do is look at where your share price is and compare it to where the current share price is and compare it to how many contracts are open at each. I don't think it gives you an actual how many total contracts, across all. I think it was Trapper, AMC Trapper, who knows where to look to see the current total contracts that are in the money. But as far as a running count of every strike price, I don't know what site would actually have those. But you can kind of, glancing at it, when I give the numbers, a lot of times that's why I use the decimal points just to kind of give a rough estimate of what we're looking at for open contracts, and that's why I'll always when I give the updates, it's like 7.4K, 7.9K. I give rough estimates because those numbers do change throughout the day as people are entering or exiting positions. That's why I try to get them out once a day when I would do them in Clay's chat. But here on this channel, we could certainly do more active looks towards it. Toad, as far as my live streams, on days when the market is running a full day, I try to, when I am working at my 8 to 5, I try to come in and do a 1-hour video on my lunch, just to kind of midday, here's where the options are at. And I try to do at least a brief half-hour wrap-up live stream, and so far, this channel just started Monday of last week, so today's our 1-week anniversary. But I try to do streams after 5 p.m. Central, and that's pretty much an hour after Clay Bros. I get home from work and usually look to fire it up about 7:10, 7:15 Central Time here in the U.S. In the future, I may look towards doing a pre-market stream, but I don't have any times for that right now. And depending upon how the channel grows, may actually do some kind of bounce ideas off the wall streams on the weekends. But we're still pretty far out from that. So for now, looking in between Claybro streams, doing an hour at least every day. Yeah, that's I know anyone who's over in the UK that certainly does. It can start to get kind of late, But the midday streams, on days when the market's open, I'll try to do an hour during lunch, just to kind of give a midday evaluation. Well, looking at it, it is currently 2:06 Central, and looking to wrap the stream up and get ready for the afternoon stream on Claybo's channel. So I guess I will see all y'all over there. I want to thank you for coming by. If you haven't already subscribed before, hit that little red button, hit the like button, and if you know anyone who's looking for information, as I said, I'll go over the same information as long as I got people who are interested in it, and we can look at stocks together, look at cryptos together, and see if we can grow our portfolios together. But I want to thank everyone for coming by, and probably see y'all on the evening afternoon stream. Hopefully everyone can make it. And for me on the couch, everyone have a good day.